Diagonals are a half and half trade. Use this to your advantage. So if you think about like a half and half drink, like lemonade and iced tea, you can usually get a nice blend of something new or different. And that's what a diagonal spread is. That's exactly what it does, is it allows you to kind of blend the both of something to create kind of like a new or better world. In this case, diagonal spread is a combination of kind of a calendar spread and a vertical spread. So if we take kind of a quick peek at the construction here, when you normally start out with a calendar spread, it's nice to have some time decay or theta decay. Calendar spread could be non-directional, but in order to convert it into a diagonal spread, what you're really doing is adding kind of like a vertical spread into the mix. And that's how it works. That's how it operates. And this is something that we kind of covered quite in depth in one of my latest classes, the Diagonal Spreads 101 class. If you're interested in this class, by the way, feel free to check out our website, optionsblackbelt.com, where you can, get access to this class and see how you can get it. Anyways, the point here that I want to do is let you know that a lot of people get too wrapped up into saying, hey, I want to do a diagonal. I want to do a poor man's covered call. I want to do this kind of thing. And when you really look at it, you don't have to go into those kinds of trades. You could start out with a calendar trade, because what a lot of people do is already they morph themselves into thinking, hey, let me start out with a diagonal. But what we can do is we can go to a simple level first of doing something that's a directional, let's say calendar, or even a non-directional trade right here. Let's say it's non-directional. And if the stock doesn't move, so here, let's set up a calendar trade. If the stock doesn't move, well, I can stay in this calendar trade and let the theta decay erode, because if we just whip around left and right and it just goes sideways, so it just goes nowhere and goes left and right and up and down, nothing happens. Well, then we can stay in the calendar trade. But the minute that these things can start to head higher, like let's say it starts pushing a little bit higher to the upside, what we can do is we can diagonalize it. For example, we could sell a couple of vertical spreads over here. And now we can start diagonalizing it a little bit. So boom, boom, boom. You can see we're starting to create kind of like a diagonal spread, or a little bit more directional. So here, if I do 20 contracts there, what you'll see is now I've got a little bit of room and cushion to the upside. So this is what's nice about starting with a calendar spread and then urging or moving into maybe a diagonal spread by adding and layering kind of those verticals in. And I don't have to do a ton of them, right? I could start with calendar spread that's simple, where we've got, a handful of contracts. And then after I get into those trades, then I can slowly ease into the vertical spreads. I don't have to do 20 contracts. I could start with 2 contracts to ease that delta, because look what's happening. Right now, I've got a delta of about 13 on the calendar spread. But the minute I start adding and selling some vertical spreads into it, I could get to a delta of 20, then I could get to a delta of 26. So by adding more vertical spread, I can diagonalize it even more and more and more, depending on how many vertical spreads I have. That makes it much more flexible than just doing a flat out diagonal. Now I've got 2 components. Yes, it does give it a little bit of more, call it work, or a little bit more things to deal with, but it gives you more flexibility. Now you could take off the calendar spread if the calendar is working, or you could take off the vertical spreads if the verticals are working. That's what's interesting about these types of trades, is that when you go in and set stuff up like this, it gives you a lot of flexibility in managing those trades and managing the positions. Let me see if I can enter one of these trades in there, and then we can see if we can play with it. There we go. So I've got the contracts in there, and now what we can do is that since we've got this calendar spread on there, we can slowly start saying, hey, well, if price starts moving up, I can start layering in a couple of these other trades in here. And that way I can start easing into diagonalizing my calendar. And there we go. So I've got kind of like a mix, a blended strategy, 20 calendars with 3 verticals in there on the put side, now creating a little bit of a diagonalization in here, really custom tuned and fine tuned to my personal needs. Anyway, so that's how you go in and make kind of like a diagonal spread. Really, you're starting out from a calendar being neutral, and then you add some verticals into it, and now you get a little bit more direction. hence a diagonal spread. Anyways, hope you found this video helpful, gave you a little insight. If you're interested in one of the classes that we have on Diagonal Spreads 101, check out our website at optionsblackbelt.com. We just did a 3-day workshop on all this, lots to cover in the diagonals, and you can learn a lot more in there with a ton of other classes that we've got going on. Anyways, thanks for joining me. Truly appreciate it, and maybe I'll see you in our next live class. Take care.